This is Jonathan Ebba with UNH Extension. We have another quick lecture on cut flower production. This one is specifically about costing and finding prices. This is a continuation of the scheduling video, so if you've not seen that one, you should go back and watch that. That'll help you to understand what we're looking at here. First off, some fine print. I am not a tax lawyer. I am not an accountant. I'm not even a business professor. This is just one method, and what I'm going to look at today isn't for your taxes. It's not even for your bookkeeping. This is to help you understand your costs and to set prices and to help assess profitability on each of the different crops that you're going to grow before you start them. So our first question is, what are these crops? We're going to break them up into two different types. We're going to talk about direct costs. Those are associated directly with that crop. That might be seed, any potting soil you might need, if you're taking cuttings, if you're buying plugs, perhaps the trellising or the support that you're using for it. Labor and fertilizer, for the sake of this exercise, we're going to leave that up to you. If you can accurately put those costs with, say, your sunflowers versus your zinnias, then go ahead and do that, and you can use them as a direct cost. Much simpler is to take those things and use them as indirect costs that you're going to spread out across all of your different crops, even though there might be a little bit more labor, say, on your cosmos than on your sunflowers or something. The point is that we want to make sure we have all of our costs accounted for in this exercise. So the indirect costs, kind of everything else. This is your taxes, insurance, mortgage, interest, maintenance, infrastructure stuff. Maybe this is the cost of a tractor, this is irrigation, things like that. All the stuff that we have to pay for that we can't really point to this zinnia or this cosmos as having those costs. So how do we allocate all of those indirect costs, right? How do I know how much insurance goes into a zinnia? How do I know how much irrigation goes into a zinnia? And then is it the same for a sweet pea? Is it appropriate to put the same amount into every single stem we grow, or do some stems realistically need to have a higher amount of those indirect costs associated with them? So I'm going to suggest that for cut flowers, we look simply at all the indirect costs per square foot. In greenhouse production, we look at both space and time, but for our limited season, particularly here in the Northeast, I think we're going to simplify it, and I propose that we look at just space. This is going to allow us to give a higher cost to big space hogs like sunflowers and less cost allocated to crops with more stems per square foot. I'm going to start putting numbers on the screen. All of these numbers, and from here on, these are made up. Your mileage will vary. Do not plan based on any of the numbers that are up here on the screen. So the first thing I want to ask you is, how many square feet of cut flower production do you use? Right? This is just the sum of the area of your beds. And then the next question, again, looking at this very simply, what are all of your indirect costs for the year? Add those all up: insurance, truck, electricity, mortgage. Remember, if you can't accurately put all of your labor into the different crops that you're growing, which most people can't, it's going to go in here. And we'll total those up. Now simply we take those indirect costs per year, divide them by the number of square feet of production you have, and that gives us this idea of how much it costs us to grow 1 square foot per year, how much it costs us in those indirect costs. And the example I've given here is $3.47 for every square foot of production space is what that square foot costs us in indirect costs. So going back here, if we start with our sunflower, and I just put little scribbles here in the crop name, the variety, and I've got one column here that says all the scheduling info. So again, go back to that other lecture if you haven't seen that yet. And this is all the stuff that goes into timing of this. We we decided in the last presentation we're going to grow 50 of these. Each one takes 0.56 square feet, and that means that we need to plant a total of 28 square feet. The next thing I want to do, because we have to account for shrink, right? If we're going to sow and plant 50 of these, we have to pay for 50, and we have to take the space required for 50. But reality is we might not get 50 out of there, right? And so your experience is going to give you some sense of, in that whole crop, how many are you actually going to be able to bring to market, and not just bring to market, but sell at market, right? So we're going to account for shrink in this method this way. And so I'm saying that we're going to get 40 stems out of that crop. That way, when I start figuring out how much we're making, I'm making it based on 40, but how much are we spending, of course, is based on 50. So then if we expect to get 40 stems per crop and the whole thing takes 28 square feet, we expect to get 1.4 stems per square foot. So our direct cost for the whole crop, so this is all the seeds that went in there. I don't remember if this one, because I've hidden all the scheduling info, if this was a direct sow or coming from plugs, but maybe potting soil, etc., associated with this crop, trellising, netting. We'll say it was $25 for that whole crop. So for that whole 28 square feet. So then my direct cost per stem, since I'm only going to get 40 out of there, even though I put 50 in and it cost me $25, is 63 cents per stem. Now in our last slide, we saw that this imaginary farm costs in indirect costs $3.47 per square foot. So if I'm growing 28 square feet at that price, this is the indirect cost to grow this one crop. So I divide that by the number of stems, 9716 divided by 40 stems. Each stem that gets sold, not that gets sown, but gets sold, costs $2.43 in indirect costs. So now very simply, I can add up my direct costs plus my indirect costs to get a total cost per stem. And in this case, it's $3.05. Now let's look at profitability. So now again, the same spreadsheet, it just keeps getting longer and longer. I smooshed in all that scheduling and spacing info. I smooshed in all that costing info that we just looked at. And what I carried over was that our total cost per stem was $3.05. All right, now let's look at the price per stem. How much are we selling this for? Let's say this farm is selling it for $4 a stem. And again, this is not a pricing recommendation. These are just make-believe numbers. Do not use these numbers here for your real farm. And then we see our net profit per stem. And the reason I can say it's net profit is because this total cost is the total cost for all 50, but the way we worked it in that last spreadsheet, that's coming out accounting for the fact that we're only going to be able to sell 40 of those. And so that net profit is 95 cents per stem. And then net profit margin, this is sort of a measure of how much profit we can get out of that sale price. This is the net profit divided by the sale price. And we see for this particular crop, it's 23.7%. That's a pretty good place to be on net margin. How do we price? Some people price based on, I want to be 5 cents less than the person down the street, right? And that's a quick race to the bottom. We can really undercut the market pretty quickly that way. Some people kind of take all their costs as they perceive them and do on the plant and then do a markup. I would propose, if we are scheduling out like this and getting a good look at our actual net profit margin, that we should be thinking about targeting a number here. You know, maybe that number is 20%, maybe that number is 40 to 50%. But as you are bringing crop to market, and by doing the exercise that we just went through, having a sense before you even start, if that net profit margin is, less than 3, 4, 5, 6, maybe less than 8%, we need to seriously consider whether or not we should even grow that crop, right? And so over time, and by looking at this and keeping track of these numbers, we should be able to get a better sense of where you and your farm needs to be at a net profit margin percentage to make what you're doing worthwhile. And one nice thing about having all this stuff in a spreadsheet, particularly if the spreadsheet is doing the math for you as opposed to having it out on some graph paper, is that you can modify these different variables to see the effects. And the one really obvious implication of that is if we see, we all want to get the lowest costs we can. So, maybe we're really trying to reduce the cost of irrigation or get a better deal on plastic or something like that. The reduction of a direct cost has so much less influence over our net profit margin than an increase in price does. And so this would allow you to play with those numbers and see, what if I could get 25 cents more per stem of this? Even if it means I sold a little bit less, what effect would that have? And so we're able to think about pricing and cost before we actually have to outlay that money, back when we're in the planning phase.